Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Well, SPY gave us a nice little pullback last week, December 27th. We gotta talk about that. Beautiful, beautiful. So what did we talk about in the video on Friday morning's video? On Friday morning's video, Uncle Charles identified the chop range for us, for the sheeps. Okay, I mentioned the 598 was support, 602 was the resistance, the top of the chop range, with 600 as the middle level. Okay, what happened? Well, in the pre-market right here, we had a breakdown of the 598 level. Okay, breakdown of the 598 level in the pre-market. Couldn't really trade that. Couldn't really trade this setup right here using options, right? Puts. However, when this happens, we always have to look at the context and identify the next setup relative to where it opens, okay? You go to my Discord, right here. SPY trying to open below 598. If it does, 596 and 594 are in play next. Those levels would have been in play next. No longs or calls, depending on what you choose to trade, unless 598 and 600 can clear. Now, how do I always tell us to enter calls and how do I always tell us to enter puts? I always tell us to enter calls when we break out resistant levels or we get a false breakdown setup. In this case, 598 broke down in the pre-market. So the only way I would have recommended calls, or I would have entered calls myself, is if 598 would have closed above, if the price would have closed above 598 or closed above 600 on the 15-minute chart minimum. That is not what happened, okay? I don't identify these levels and setups to impose my will. I identify these levels and setups so that I can follow the price action. So if we enter calls by getting breakouts of resistance or false breakdowns, that means we enter puts if we get breakdowns of support or false breakouts, okay? So once we got the breakdown of 596, that was the trigger to enter puts. You want to look to enter as close to the breakdown level that you're referencing as possible. You guys can see entering puts below 598 or as it broke down, seeing that it closed below to confirm, hey, you made the right decision. Boom, you just follow the price action. What is the next setup? We open below 598. Longs above 598 or short below 596, because that's the next support level. We got the breakdown of 596, which I alerted to the group. 596 loss. And it gave us a nice move. Broke down 594, broke down 592.6. I had a level on 591 before it finally bounced. So that was the thought process. Okay, we identified the levels and the setups. Know the levels, know the setups, and just trade it unbiasedly. No matter where the price action is, that's where no matter where the price is, that's where you want to identify the next setup. So open below 598, long above 598, or short if the next breakdown support level fails. And it worked out beautifully with the loss of 596. So now, what do we do now? Now we need to look at the context. Is the Santa rally over? I mean, as far as the Santa rally, we did get a Santa rally. Okay? I'm sure all the bull bias traders thought the Santa rally was going to send us to new all-time high. Clearly, they were wrong. This is why I don't like to try to predict these things. You're most likely going to be wrong anyways. It's designed for us retailers to be wrong. The best thing to do is to just react the sheep style way. Identify the levels, the setups, and just trade it. Okay, but as far as the Santa rally, we got it. Because look, on December 20th, the low was 580.9. And the high from last week was 602.48. I'd say that's a pretty big bullish rally. question now is it over or will it continue? Usually January is a bearish month, okay? But it's not January yet. We still got to be open to any and all scenario. We should always be like this. But if the Santa rally is not over and Friday was just a little cool down day, then as usual, resistant levels must clear. Starting with 595, which is a fib level, and that would put 596.5 and 598 in play. 598 being the critical level, okay? 598 being the critical level. If 598 can clear, I would definitely favor more upside. 600 and 602 plus would definitely be incoming. Okay, guys, as of right now, I have support at 592.6. Okay, if that level fails, then the pullback that we had on Friday continues downwards. Loss of 592.6 will put 591 and 589 in play. Watch the price action behavior. If we continue to break down and close below support levels on the 15-minute chart, that's bearish behavior. Okay? And if we, in my opinion, if we do lose 592.6 today, which is a macro level fib level, if I zoom out a little bit, it's a macro level fib level. I think that this high we had on Thursday, the day after Christmas, could be a higher, a lower high. Okay, and then it could possibly send us a lot lower. It still looks like a potential head and shoulder, developing here, guys. All right, now I'm not saying I'm bearish or bullish. All I'm saying is be open to any scenario, whether it's to the upside or to the downside. All right, if we clear 595, we clear 596.5, and if we clear 598, just look to long. The same way I show you guys on the 15-minute chart. We look at the 15-minute chart, use the levels that Uncle gave you. We break out those resistance levels, look to long. And if we break down those support levels, look to short. Follow the price action like a sheep. Because people say sheeps are just followers. Triple Q, we approach it the same way, but the levels are just different. Okay, I have support at 520.5 and 519. If those levels fail, 517 and 515.5 is in play. I believe if we lose 519, I think the high that we had on December 26th last week would be a lower high as well, and we could go a lot lower. Could possibly head all the way back down to 509. Okay, big possibility, but either way, we need to break down 520.5 and 519 to trigger puts. Now, if it's gonna be a bounce and we're gonna keep going up for the Santa rally, resistant levels must clear 522, 523.5, and I have a fib level at 526. Actually 526.2. Those levels must clear to put 528.6, 530, and 532 in play. All right. I know I said a lot, but bottom line, we lose 519. I'd be very bearish, and if we can bounce and clear 522 and 523.6, I'd be bullish. Tesla, that dark cloud candle that we spoke about last week. It's sad. No one give Uncle credit because that was such a beautiful move, man. But anyways, played out beautifully. Played out very beautifully. I do cover Tesla. If you're like a tier 1 member or higher, played out beautifully. I even question it. Can the dark cloud cover candle play out? If yes, resistant at 453 must hold on any bounce. You gotta hold on as resistant. If support at 447 fails and 445 or 443 or lower is incoming, okay? And we had the breakdown of the next resistance level. What did I say? 447, 445, 443. We broke it all down, gave us this incredible move. Somebody said my Discord, I charge too much for my Discord, which blows my mind because I think I charge very cheap. Now imagine you short the breakdown of the levels I gave you, you would have made thousands of dollars. You know what I mean? This one trade right here would have paid for your Discord membership for the next year and a half or something. Anyways, well, the next levels that I do have right now, okay, I do have at 424, 422, and a fib level, macro level, fib level at 420 with 417.6 below. Okay, if this is going to continue downwards, which is a good chance it will, 424, 422, and 420 must fail to put the lower targets in play. You play level to level and leave some runners for the potential bigger move. Now, if we're going to get a relief rally, relief bounce, whatever, resistant levels must clear down with 426, 428, and 430. Clear those levels. That'll put 433, 434.5, 436 plus all back in play. Remember, try not to call a bottom unless we can get some type of false breakdown setup, okay? NVDA, oh, I mean, we had the breakout, right? And it led to a little bit higher move, but looks like it came back for the back test as a support, okay? Now, based on the downtrend line, support, critical support's at 135 now, and NVDA is a little above it as you know, as of making this video. So if we do break down 135, guys, NVDA is going to go into false breakout mode, which is bearish, and the RSI is not oversold or anything like that. So it definitely has strength to head lower. We lose 135, guys. We're heading down lower. 133.5, 132, 130, 127 would all be targets. Now, if this is a bounce, if this is one of those back test and go situation where we back test the breakout, then 136.5, 138, and 140 must clear. Okay, now the context is a little different from last week. Okay, so we clear those levels, that would be bullish. IWM, I have a critical fib level support at 222 and then 220. Yeah, you got to break down those levels, give us the daily chart close below those levels, and maybe we can head down lower, down to 218, 216.5 or lower. All right, if it's bounce time, 224 and 226 must clear to put 228 in play. Above 228 could possibly get some type of bottom in. All right, Apple got a nice pullback. Nice pullback. I had this macro level trend line here. If I pull back, macro level. See the white line? Macro level trend line going back all the way to July. Now, we broke out this trend line, but then on Friday, we had a nice pullback and closed right on it. Okay, so is this a false breakout? Not yet. Okay, for it to be a false breakout, it needs to close below 255 on daily chart. Right now we're below 255, so it is kind of looking good for the bears. Bears need to show follow through by closing below 255 end of day, right? But for more bearishness, break down support 253, 251.5, and 250 are support. We break down those levels, more downside possible. Okay, we're above 255 and we clear 257 and 260, then guess what? The breakout stays intact and more upside are in play. Okay, Amazon still look like it's consolidating here. It did break out that inside candle setup to the downside though, so that is bearish to be honest. Okay, inside candle setup, we broke down the mother candle's low, gap below and just head down lower. That's bear setup. So for bears fall through today, 222 and 220 must fail, and if they do, I would look to short, and I would favor 216 testing, and there's a good possible chance 216 could fail, but I would play level to level to be safe. If the plan is not to the downside, 224 and 226 must clear. If those levels clear, 227.5 would be in play. A breakout of 227.5 would break out this downtrend line that I have here and would be very bullish. Put in 230, 232 or higher in play. Okay, guys. Meta. Well, we went and back tested this fib level I had, 591.5. We had a false breakdown around that area recently. And then we came and back tested it as a support and bounced. Okay. So if there is bullish follow through today, next resistant levels must clear at 598, 600, 601.5 and 603. Big chance the bottom is in if 603 can recapture. All right. Now, if last week was a dead cat bounce, the one we had on Friday is a dead cat bounce, then today support levels must fail. Okay, I have support at 596, 594.5, 593, there's the critical one at 591.5. And if we break that down, this false breakdown setup we had gets invalidated. That would be bearish if we lose that level. All right, that's what I got for Meta. Microsoft definitely look bearish, heading down lower. I have the next critical support level at 428. That is a fib level. So if we break that level down today, more downside is definitely possible. 426 or lower incoming. Okay, guys. Resistance at 430 or higher at 432. If we cleared those resistance levels, then 436 and 437.6 will all be back in play. I can't favor a bottom is in unless we can recapture 437.6 and get back above the 440 area. DXY, I don't know. The volatility just dropped on this. It is looking a bit weak, not gonna lie. So below 108, it is bearish. And breaking down 107.5 would definitely send DXY lower. I can't get bullish on DXY unless it can get above 108, guys, to put 108.6 and 109 back in play. Coin's looking bearish. Still looking bearish. Because remember, we broke down this critical fib level I had around 283.5-ish. We back tested it as a resistant. The arrow pointing at it. And we dropped lower. All right. I have a fib level at 265, and we're currently below that as well. Okay. So next support I have is at 262 and 260. If those levels fail, guys, we could be heading all the way down to 256 or lower. I'm trusting no bounce unless 265 can recapture. Okay. I have resistance at 263.5 and 265. So those levels got to recapture. Maybe we can try and start a W pattern or something like that, okay? But it won't happen unless we start clearing resistant levels. And I have 263.5, 265, 267, and 270 in play. This stock is not for the faint of heart. So just keep in mind, it's very volatile. It's, costs money to make money. But, hey, scared money don't make money. Doge is just chopping. Like I said last week, the chop range is 34 cents down to 30 cents. So anything between 30 to 34 cents is just chop and noise. For a bullish breakout, for bulls to take back control of momentum, they need to clear 32 cents and 34 cents. Above 34 cents, I would long. Give it a shot. I could be wrong, but above 34 cents, I would give it a shot at some longs. And if we lose 30 cents, I'd definitely be bearish and favor more downside. Bitcoin is still, it's flirting with this uptrend line that I have here. It does look like a head and shoulder. Could be forming. This could be the neckline. So, I mean, if it breaks down 93K, that would be extremely bearish, in my opinion. Okay, I can't favor a true bounce unless 96K, 98K, and 100K all recaptures. All right. So that's all I have for you guys this morning. I hope you guys find value in this video. If you did, please hit the like button. Please subscribe. And good luck today, guys. Peace.